Morning, afternoon, and welcome to our last live stream of, or before Christmas. We might get one in between Christmas and New Year, who knows, depends how much I have to drink, of course. But welcome to the Mohawk Forex Scalping group live. 3-minute scalping, true scalping, no messing around, no BS like everybody else gives you. I give it to you straight, win, lose or draw. We've got our axe trading system, which you can see here. We're loaded up on US-30 and gold and oil at the moment, as we're waiting for the Chicago Fed news to come out. The big news day. Obviously, this is what happens as you get to a holiday season. The news kind of piles up in 1 or 2 days. So today is a good day. As you can see on the chart, we've got the US GDP and the Chicago Fed in about 7 minutes. And then we've got existing home sales, we've got the consumer confidence, and then we've got some oil news as well. So this is a great 3-hour kind of stream to try and bag some pre-Christmas pips and take advantage. Because markets are slower, of course, but these news events will still move the market, because the market at the moment is been very volatile, very whipsawy, and there's a catalysts are always needed to make the market move, and these news events are what we base our system on. And these could well do it. So we'll stick with US-30 and gold, and obviously as it's pre-market, i.e. before New York opens, we always tend to trade the reverse to get the market manipulation. So with gold, we'll look to go in the direction of the news, and with US-30, if you decide to trade in US-30, we usually go in the reverse of the news event. Then we flip it round for when the market opens, and then we're half an hour into the open, we've got the existing home sales, and we trade with it. And it's a consumer confidence. So, and again, I teach all this, how to trade the manipulation, the spikes in the market, in my trading group, this trading group. Just go to the website www.mohawkforex.com for information on how to join our Discord VIP group, where I do all the setups most days of the week, and we talk about setups, crypto and everything else, as well as forex pairs and stocks and indices. You can get me as your mentor, but also more importantly, you get access to this axe trading system, our scalping system here, which is a boutique system created by a couple of the guys, and this is unique to our trading group. It's no holy grail. You've still got to do your TA, you've still got to use your fundamentals, you still, when we're price action traders, but this gives us a little edge when we're trading on small time frames, where to get in and out of trades. And that's what it's all about. And again, information on this is all on the website. So before I grab another coffee, let's do this first news event. Let's see what we can get out of the market. Obviously we've got Bloomberg on as well. Background, we have Bloomberg on, keeping an eye on everything. There's always a lag on YouTube, but it gives us an idea what's going on. We've got oil set up nicely as well, it's looking good for later on, and obviously oil, gold. So this is great because you've got US-30 dropping and you've got gold going higher, so correlation, which you always like to see, is kind of there. So again, depending on this news, medium impact, so it's not a great shifter, but the Chicago Fed is pretty good. I love trading this one, and as you can see, higher than expected figure is positive for the US dollar, and it's looking to be lower. It was 7.6 last month, and now we're looking at 0.5. This again, markets would have costed that in, that assumption that things are going to be lower. So if we get a higher result than the 5, then we'll look to take buys on gold, and we'll look to probably take sales on the US-30. It's very slow, US-30 this time of year, even when it's nearly medium impact. So gold is more likely to be the one. And obviously if you do enter US-30 and it gets towards the New York Open and you're in a loss, obviously I always end the trade, because you want to be going the reverse on the Open. The Open's where you should be trading the US-30 ideally, but again, if you want to try it with small lot size, fine, do it, because most of the time it does end up hitting target, but it just takes a little bit of time to get there.
We have restaurants that are closing on certain days because they don't have.
So got a couple of minutes now.
That's true across the board. And so the provisions in Build Back Better discourage workers from getting back to work, and as a result, will have a big impact, I believe, on rising.
3 minutes to go.
Congressman, it strikes me that the market's starting to get nervous about the removal of the extraordinary fiscal and monetary policy supports that were enacted throughout 2020 and early 2021. Do you see a path by which the fiscal policymakers can start to remove and normalize, rationalize spending?
So we'll stick on, I'm just going to put my arrows on here. I'm not saying this is where it's going to go, but I just have these ready. Things on the news. If the news is good, then obviously we'll look to take a sell on US-30. If the news is good, we'll look to take buys on gold. And we've got some levels here. We're only going to look for 100 points, 50 to 100 points. See on here, zooming in.
Other people disagree with that. But I believe that the monetary
we have got potential at the moment for around about that 100 look on gold.
Is finally recognizing that the rising prices, that the inflation is not.
And if the news is bad, then obviously we can look at taking the sells, and we're going to go down to our breakout line. We could be looking about 50 on the sell. Again, I'm just going to go in, get the green, and get out again. But at least you know what you're dealing with. You know, there's no good saying I want to get 200 points and you've got all these levels of support blocking you and a trend line as well. You know, it's just ludicrous. Our people preset levels. You've got to go what the market gives you. And if all we're going to look for is 50 points if the candle stays where it is, and that's what we're going to get. And if we're going to go 100 on the buy, we'll go for that. You know, not many people teach you that or show you this. Assume you're going to get a 2 to 1, 3 to 1, 4 to 1, and all that. It's nonsense. It's not how markets work. So that, you know, we're just leveling off. Again, I don't do pending orders. I go straight in. And this is, and if you miss the initial news release, you don't panic. You wait for the candle to fill, and then you catch pullback. Simple as. Because obviously news releases can be a bit slow sometimes. But we're set. Row is set. Don't know which way is this going to go, of course. 1 minute to go. Ideally, when you've got 4 news events, and this is Q3, obviously, which we assume is going to be bad because it was for the UK. But again, you don't know. You never click on assumptions. But we want all these to be the same way. So if the Chicago Fed was actually worse than expected, all fall red, brilliant. Then yeah, that's going to move the markets more than if it's a mixed result. See, we get ready. Look, US-30 is already continuing to dip. Break this level here. $15 seconds. Good luck, everybody. Here we go. Worse than expected on Chicago Fed. Good. So I'm going to put some sales on gold. Let's see what the GDP is. We're already in profit on gold as well. We're not going to mess around. And excellent. There's good news. We've got in and out on the Chicago Fed. We just took $20 on US-30 because it went the wrong way, but we got nearly $100 on gold. So now we'll look to trade. If this is good news, we'll look to go the sell on US-30 this time. I like it when it goes both ways. There's nothing with that at all. You can see There you go, there's the pullback. This is what I'm talking about. So I'm going to look for, we went for the buy, we did on US-30. So I'm going to get in on the sell this time. Gold, I'm done.
Protesters reached the Capitol. Democracy has prevailed.
Flash mob decided to take on the short.
Giant container ship.
4 nice wins.
Songs, you love.
Rise in energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
Oh, we've got open again. US-30.
We ran a big survey around 32 countries, more than 30,000
Look,
people took part. And as you say, there was a big gap in between people that were worried about
See if this pushes down.
people that were taking action.
We're in profit at the moment. Again, don't go too crazy on it. I've already taken 4 wins. I'm going to get out at take $20, $30, whatever. That's all you need on this, and you can go the reverse always. So, I'm going to spike down. We'll get out on this. There's the rest of the news.
From a data drop here in the US. Ahead of that, we are starting to roll over a bit in the future session right now. S&P 500 futures.
Again, it's a mixed one.
0.2%.
Again, I would get out of any trades.
Basically unchanged.
Wait.
Less than a basis point to 146.86. We are
So I got out with just 10 on that one. Wait and see. It's mixed, you see. It's not brilliant, but the Chicago Fed was the one we got in on gold. That's as expected.
Survey and the prior read at 2.3%. The prior
we
read
go.
had been 2.1%. So a little bit better growth in that third quarter of the year than we previously saw. When it comes to personal consumption, that too up more than expected. 2 percentage points. Economists were looking for 1.7.
But overall, they're saying that's good news.
Also a little bit higher on that more inflationary read. 4.6% is what we're looking at relative to the prior read of 4.5% guy.
Yeah, real rearview mirror stuff here in terms of.
So let's go back in on US-30.
And a little bit more growth.
And again,
financial economist at Jefferies, joining us now.
Gold as well.
As I say, this is in the rearview mirror, Nessa. What I'm now trying to focus on and trying to understand.
We're back in and we're out. Bang, bang, bang. Gold done. Got in on the sell on gold there on that announcement of the better news. Went there on reverse. As soon as that candle filled, you can see, look, the nice big candle.
And how Omicron is ultimately going to affect the data going forward. What are you seeing? What are you understanding about the story at the moment?
So we saw incredibly strong momentum going into the Thanksgiving weekend. Really started in September, October. So very strong retail sales, very strong consumer activity in general. And going into the Thanksgiving
there's the
weekend,
one,
we
beautiful.
were tracking 9% GDP growth for the fourth quarter. And we're
The GDP news kind of overrode the Chicago Fed, as you'd expect.
Right now we're estimating about 7.25% growth. But Q1 really looks in question.
There was your initial spike. Look, as you can see, look at that. There was the announcement. There was the spike for the buy, which I took, as you can see. Look, and that was a nice. Like I say, I went for 50 points. Now we're going on the reverse. This should come back up and be a buy again. So, bit of a mixed one. Not the easiest thing, but again. Just get in and just pick the trade you want to do. You don't have to do both. You can go just choose gold or just choose US-30 on US-30 here. Waiting to see if this pulls back.
What is the inflationary aspect of the story you've just laid out? In prior cycles,
there you go. So index was as expected, which is good. Corporate profits were down. Growth rate was up, which is the big one. And Chicago Fed was lower. So you got a clash here, but the good thing about these news events, when they come out separately, you can trade them and get in and out quick before the next one comes. So I got in, took the wins on the Chicago Fed, and then we swapped around for the GDP. Perfect way to do it.
changed my outlook for
And like I say, I've got no positions at the moment. I'm just going to see if US-30 is going to drop back down.
exaggerated in the fourth quarter.
But you can see here, look, a nice little kind of M pattern.
Going into the holidays, and
Let's see if the RSI comes down.
when supply is absolutely
Going to set a level
so again, that
because US-30 is always slower to react.
exaggerated. The supply
See here,
demand
look, there's the level I want to be looking at across here.
slowdown in January now that obviously could be
Just want to be looking to get in and out on this. It's slow moving, but yeah, looks potential for 140 points.
are a risk, but when there's still, roughly 100 ships floating on the Pacific, even if China closes the port for a couple of days, as long as the U.S. ports are not impacted, I don't,
Get to Chicago first.
from this.
Annetta, let's shift a little bit and talk about the Fed and what you see from the Fed this year. If your base case does indeed prove to be correct and we get some easing of supply chain concerns, is the Fed path likely to be too tight or too
Brilliant.
easy?
There we go. And we're in and out on US-30. That's job done. So that's it. That's that news event traded. We're done in 7 minutes, and we did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 positions, 10 trades taken, and all green. No panic. Easy true scalping. No messing around.
So I think just to preserve the credibility of the new framework, they should sit that meeting out.
All done. And that's the whole idea. You don't want to be trading sat at your desk a long time. These are the kind of things you need to jump on.
Maybe sort of mispricing relative to my view is what happens after this year, and just how many hikes will it take to really.
And we secure 50, 60, 70, 80, 90, 120, 104, 150, about $270.
They're not suggesting that we're going back to 2% inflation. They're suggesting that we're going to settle somewhere around 3%. And so at some point, in order to get back to 2% inflation, I think the Fed will have to tighten more aggressively in a way that's consistent with the framework. And to me, that implies a lot more aggressive tightening in 23 and 24.
I'm glad you brought up the framework, because it does seem that, at least based on Chairman Powell's comments, they're backpedaling a little bit from this idea of maximum employment really playing a big part, which to me is a pretty big shift from where they were just a year ago, really leaning on this maximum employment idea as particularly consequential to their policy. Do you see it the same way? Are they backpedaling from this idea, or have they simply just put it on ice and they'll bring it back later this year or into next year?
They're definitely backpedaling. They've sort of revised their definition
So
of employment up until.
There you go. And there's the US-30 dropping. You see, US-30 good news. Look what happens. Look at the chart. Look at what the chart tells you. It's this is what people don't understand. And we did actually get a cheeky little buy. We got this little. There's the spike. Look, because here is the candle that finished before the news, obviously the bottom. The news came out initially that Chicago was good, so we took the buy, the opposite, and there you go. Look, there's the proof that it does it. Look, there it is. Look, it spiked up at 266. Okay, I got $20. Doesn't matter. Then obviously the next news came out, which was good, GDP, and US-30 goes down. I mean, how many times do you have to see this every single day? You just got to get with it and accept what the market does. And then we'll trade the reverse on the open in about 45 minutes. I'm actually going to split this off as well to show, because it was two separate news events basically in the end.
Annetta, so often when I'm on this show and others, and we talk about the mysteries of this labor market and the lack of a recovery in participation, the conversation.
And just to put on here, look better, so you can see that
need to stay at home, and that brings me to the fiscal part
drop
of this equation as well.
The better than expected. It came out. I mean, it didn't come out exactly on this time. That was a good thing. It came out about 3 or 4 minutes later, didn't it? So
how does that impact your forecast for the U.S. economy?
There, look.
So look, I think that we are in a chronic labor shortage that's not going away anytime soon. And that has to do with both the supply and demand side, right? On the demand side,
is. If the consumer sees inflation coming, that has a meaningful impact on behavior. The other thing I want to talk about as well, Kaylee, is what is happening with the 50-year-olds. We talk about the younger age groups and the working mothers, but 50-year-olds have left the labor market in huge swathes. And one of the reasons for
just putting this on there just for back testing and for the group, so you can see how we trade the news. So, you know, you might think, oh, it was worse than expected, it sold off, but you're not looking. You're not looking at true scalping. You're not looking at where you can get. Yes, you went with it, but we're not fussed. We're watching this spike here. Look, that's what we were concentrating on, and that was worth $100. You know what I mean? That's the kind of things, because you're buying at the bottom of this candle, thereabouts, and then you're hitting that spike. Look, this is what we were. So the news was worse than expected. US-30 goes up. News was better than expected. US-30 goes down.
When it comes to the NFL playoffs. I know that's not your kind of football guy, but that's my kind of football, so I just had to get it in there. Coming up, we're going to look ahead to the holidays. It's not just going to bring football, will it bring travel? Brian Kelly, the Points Guy founder and CEO, will be joining us next on TV and radio. This is Bloomberg.
With the First Word News, I'm Rich Gupta. President Biden will host a meeting at the White House later this morning to discuss global supply chain bottlenecks and the COVID-19 pandemic. The White House says members of the president's team will be on hand, as well as participants from the private sector, including the CEOs of FedEx and Gap. If you can track the Omicron variant of COVID-19, a new study finds you are 80%
Now you can either decide to wait for the open or
other strains of the virus, but the research done in South Africa found that once patients are admitted to a hospital, the risk of severe disease doesn't differ from other variants. The study also showed that those with Omicron may have higher viral loads. Chile tops Bloomberg's COVID resilience ranking in December. It reflects the broader recovery of
you decide to get back in again on some of these trades. Now, with the US-30 here, look, we could have got a re-entry. We took the sell anyway, so there's no need to be greedy. So we will, if this the RSI pops out of the oversold zone and goes back in again, then we'll look to take a sell again and probably go for another 50 or so pips. There's our TPC, which was hit. Now you'd extend it down to here, this level just above our points of interest line, this grid system that we have set up. An idea where price get to. There you go, it's pushing down now. Look, this is really good. You can measure what your potential is. US-30 really taking a hit. Then you got Omicron news as well as, you know, the news has just come out. But the GDP was better than expected. It just shows you the manipulation. Brill, and we're in and out. Great, we just scalped it 2 times there. And what did we get? We got £15 and £7. We got £23, about $30. There you go, while I was talking to you. What was that? 30 seconds? 30 seconds, $30. That's a good payday. Yep, pushing down lower, but it doesn't matter because I know it's approaching a level of heavy support here. And this is what we can zoom out on our chart and see. We're looking at our dashboard as well. We're bearish to 70%. I like it to be a bit higher than that. But everything's looking like it wants to go down. RSI is 19. Let's see what happens when it hits this heavy support. And we've got our next trend line. And that previous D was hit. Got the market open coming up, remember, next. So what was that? Let's have a look at gold. How gold reacted, exactly the same. So gold, like I say, the news was good, and look what happened. It popped up, came out. There you go. There was so we actually bought gold at the bottom. That news, which was here. Look, it took about 3 or 4 minutes to come out. So there was the Obviously it went up as like I say, gold goes the reverse to how you usually trade it. It goes with the news. As you can see, it's rising now as US-30 is dropping, so it's perfect correlation. And then on that initial Chicago Town one, which was bad news, we sold. And you can see here, look, I'll do a separate arrow because there was there's your candle before. Here's your indecision candle when the news came out, which, yeah, it shot up a little bit, but look at it, went down, and the next candle, boom, take your profit. So that was your sell. That was your and that was worse. We took the sell. Sure, that better. So like I say, it's good when these news events come out at different times. If you're quick enough, you get in and out, and you manage to bag £56. So we managed to bag about $80 on that one little move there, and we're already $100 up when we came back in. So you know, that's a perfect perfect true scalping on that. Really pleased with that. Now, what are you thinking on gold? Now, gold now, you know, yes, you could look to take a buy if it breaks our average line and goes above, but look how close it is to a breakout and another distance, which it's kind of sat on now. Look, it's kind of pushing towards it. So, you know, there's no rush. You just zoom out and have a look. How we traded all this in the open from earlier. Again, gold aiming to get back to 1800. At the same time, you know, if there was good news about Omicron coming out all of a sudden, then obviously gold would drop like a stone. Here is the next news we've got coming up. We've got the open, then we're going to be doing the existing home sales and consumer confidence. And then we've got the oil. And again, all tradable on gold if you want. I like to trade WTI, which I've got set up on my chart anyway because it tends to go with the news. Look at that, you see. The good news for the GDP pushes oil prices down. You could have traded that on the open, just the spread's a little bit crazy sometimes. So I tend to stick to US-30 and gold. And there you go, there's the break. It's going to break this, it's just broke our average line. So it was a risk on trader, you could try and get in for 50 on that. I won't go any more than 50. But it just sat right on a resistance, so be careful.
On Twitter who pointed this out to me. The Buffalo Bills vaccine policy, where you have to show proof of vaccination to enter the stadium, was already existing. They have now just
and swap these around because I'm using, because actually we took we took a sell on the Argo News. Let's make sure when I back test this and what we did, and we took the buys.
Talking about the virus, we also need to talk about travel and how that may be looking different this holiday season in the face of Omicron.
Yeah.
Brian Kelly, founder,
and if you miss those trades, you see, you'd still be catching it now. If it breaks this to here, you could potentially get in, but again, we're close to our breakout zone, and we know once it breaks this zone in the extension, and if it did break our trend line, then we're possibly looking at going back up to 1800 level.
You know, international travel is still highly depressed, especially to Asia. We had high hopes that Japan was going to open up for tourism and Bali.
Same the reverse with US-30. Look, if it's going to break this heavy support zone, the RSI is just poking up, so you don't want to be taking a sell at the moment. You're going to be taking a sell now if the RSI comes back up and back in again and this key level is broke. And again, I just look for 55 pips. I'm not looking for anything major. Coming up. Remember, we've got 10 minutes when we have that funny little move, always 30 minutes before the market opens. Little pre-market boost that you get as well.
You are significantly more at risk, particularly in coach.
Yeah, I did see that report today, actually, on Bloomberg. And, you know, I think there still needs to be some more data, but certainly I've always recommended use those frequent flyer miles for business class. You know, some airlines during the pandemic even allowed you to take your mask off if you were flying in business or first class, because in a lot of those cabins, you're completely separated from other people. So where possible, I highly recommend use those points and upgrade. But I don't know. I think there is fatigue amongst.
So what we'll do is we'll go and make a cup of coffee because we're going to be here for a bit. We'll just keep watching. Let's just watch and see if gold does break that level. And I'm going to set this as our next EP, as you can see, which will be just below our breakout zone. Again, small scalp. But again, for those of you who like doing micro scalping, you could still get 5, 6 pips on gold. Be worth $20, $30, you know. The RSI look is, you know, wants to get above that. We've got key levels here of about 67. Then we're into the no zone. And we're trading the way it should be. You know, we're looking for this to be as high as possible so that when we get the open, we want to get 110 pips on the drop. That's the way we do it.
For the summer. My question to you is, though, when are we going to know how strong that rebound is? Anecdotally, and I see it in the data when I talk to the airlines as well, and they obviously have real-time revenue models that are giving us this information, that people are booking super close to the point of departure. So when are we actually going to start understanding what summer bookings really look like?
You know, it's going to be until the spring. I think this is going to be a little bit of a dark winter in terms of just uncertainty. But as we see, COVID pills are going to be coming out that will hopefully cut, you know, the impact of COVID infections and, you know, really take down.
That's, see, things like that. When the COVID pill gets announced, that's when the markets will go crazy. It's all this kind of news event that people go, oh, why did I get stopped out of my trade? Oh, have you not seen the news? There's been a COVID pill announced. What are you on about? You know what I mean? How can you be like that when you're in a market that's driven by fundamentals majority of the time? We're in, you know, this last 2 years, it's all been about the fundamentals. Kind of standard TA has almost gone out the window, but there's always there's still room for this. But technical levels are there to help us gauge where to get in and out of a trade. The trend and direction is mostly gauged by the news, and of course learning how to trade the manipulation of the news like we've just done. We've just traded the reverse of what most people would go, you know, but they don't understand how the markets work, and this is what I try and teach. After doing it for a few years successfully for myself and realizing, okay, how you do it.
And are they starting to work?
Yeah, I mean, so the airlines basically survived this huge downturn by selling and mortgaging their loyalty.
As you can see, found support.
And, you know, they've done that in the past. So these loyalty programs.
But again, I would look to take a sell if this key level is broken. Otherwise, you can look at a buy, potentially back up to this level here.
It's even more flexible to use your points to book a trip. You can cancel and get them.
Your first level is your second level, but you want to see RSI way into the neutral zone. So you've got a long way to go. Looks more like to dip down again because this is still flying on the news. So I'm actually going to be more interested in that key level. Goes back in. You can be taking a sell down to this zone. Measure it. Plenty of time to measure. See what you could get, what the potential is, and look, chance of getting 100 points. It's a good range now for another half an hour or so because it's going to form a W pattern. Bounce up, bounce down, retest this zone here. That's my thoughts. Once the open is going, and regardless of the overall trend, which is probably down, yeah, no one knows at the moment. Every day's been different. We're just scalping within the bigger trends.
I check flights literally every day, and they're so expensive. Thank God for points because I don't think I'd be able to afford.
Gold, you see, didn't quite do it. See, our blue zone is holding as resistance.
You know, it just depends by the
so I'll just leave you on this just while we go make a coffee, and I'll be back in about 5 minutes.
Even booking now for Europe next summer, we've seen, you know, business class to Europe used to be $4,000, $5,000, $6,000, $7,000. You can all last summer I was flying for. You can easily find $1,500, $2,000 round trip business class to Europe. So
wow. Okay, so Brian, on that note, I know Tom Keene is somewhere out there watching or listening to this. Where should he buy his ticket next? What's cheap?
Well, I mean, Europe's cheap, and I think Europe next summer, you know, and not even in the summer. I love Europe in the shoulder season, April, May, or September, October. But you know, it really depends. I do recommend people wait because you can, you know, unless you like the process of planning a trip, which I do believe is good for mental health, even just having something booked if you're not even going to take it. But, you know, things change so rapidly that, when you're buying tickets, I would wait and see what the situation is, 60, 90 days out from your trip.
All right,
it
so
really just depends.
I hope Tom Keene heard that, not just waiting for an entry point in the market, waiting for an entry point into the travel space. Thank you so much to Brian Kelly, the Points Guy founder and CEO. And of course, who has helped us to fill in for Tom and John and Lisa all week is Gina Martin Adams. She won't be with us tomorrow. She's going to head out of here for her holidays. But Gina, thank you so much for joining us on this week. What is your number one takeaway from the past couple of days?
Yeah, I think it's that everyone remains generally pretty optimistic. I mean, we've had a few bears on the show, but generally most people are pretty optimistic, pretty sanguine about the year ahead, definitely balancing steady, strong growth with inflation pressures. But I'd get a sense of optimism from many of our guests.
All right, Gina, well, thank you so much. Guy and I will still be here tomorrow. And don't forget, Guy will be coming up in about an hour's time.
The world's urban areas are most vulnerable to climate change. Cities consume 78% of the world's energy, while also generating 60% of greenhouse gas emissions. By the year 2100, 85% of the world's population is expected to live in cities. 90% of all urban areas are coastal. And with sea levels rising, 800 million residents are likely to be affected. 1.9 degrees to 4.4 degrees Celsius is the projected increase in urban temperatures around the world by year 2100. By 2050, 1.6 billion people are projected to be vulnerable to chronic extreme heat.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Happy holidays from your Bloomberg family.
From New York City, for our viewers worldwide, I'm Alex Steele in for Jonathan Farrow. Futures trading a little bit heavy this morning. Volume disappears. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
We begin with the big issue, a new test for markets.
Year-end liquidity is pretty terrible.
We think the S&P is still got some more volatility.
Virus fears and short-term economic concerns are perking up.
The Omicron variant, whether it's Omicron or future variation.
A lot of the sentiment is already pretty dour.
Here we are at the end of 2021, still dealing with a virus named after 2019.
It's going to be a fairly challenging market.
I'd be cautious.
There is so much uncertainty in the economic term.
Enormous amount of uncertainty.
The bigger question is, what regime are we going into next year?
We're really kind of barbelling a defensive position.
There's going to be a bit of a roller coaster ride.
Fairly challenging 2022.
Let's dive right into it with our panel. Julie Beal of Kane Anderson Rudnick, Larry Adam of Raymond James, and TWP's Jay Pulaski joins us now. TPW's, sorry about that. Jay Pulaski joins us now. Guys, great to see you. So the conversation really is Omicron going to be like Delta, do you buy the dip? Or is Omicron going to be in the middle of a liquidity withdrawal from the Fed and the government? Julie, what's your take?
I think that coming up ahead, we don't just have higher interest rates, we have higher inflation, we have less stimulus that's coming down the pipe. So I think it's important to be thoughtful by quality to protect yourself, because even if it is less deadly than Delta, it is still much more transmissible. And, you know, people can't go to work if they have the virus. So it's going to have an economic impact whether or not it's deadly.
Yeah, you should see the streets of Manhattan right now and all the available parking spots in my neighborhood. Jay, would you agree with that it's time to protect yourself? We just don't know yet?
Well, I think, Alex, it's been a sell the rumor, buy the news type of market, kind of flipping the old buy the rumor, sell the news adage of financial markets. We've already sold Omicron. So to me, no, I think the fact that it is very mild and transmissible could actually end up being a good thing. Bloomberg's own resilience ranking shows that progress towards reopening has stalled, not reversed. South Africa, the epicenter, has not raised its level of worry beyond level 1, which is their lowest. You're getting good data out of Europe. So no, I think Omicron is increasingly in the rearview mirror, and it's already been discounted in the markets.
All right, Larry, you weigh in. What do you think?
No, I think it's already been discounted into the market. I mean, if you look at South Africa, you've already seen a downward trajectory there for the last 10 days. And if we follow the same path, we'll probably be peaking around the middle of January. And I think the other piece of good news that people haven't been looking really and focusing on is the fact that, you know, some of these vaccines are proving to be pretty good against this version, right? This past Monday, Moderna came out and said that the antigens are pretty positive, that, you know, it's building those neutralizing antibodies, and that's a positive. And then you look at the therapeutics on the horizon. I think they're going to be another game changer in helping us combat COVID. I think if you wait till it's actually done, it'll be too late.
Oh, fair enough. What I think all this creates is a lot of dispersion. So RBC had their investor survey out today, and this was one part that I found very interesting. They talked about the fact that there's evidence of division on a number of the issues that equity investors are grappling with, suggesting to us that the mood of the market is perplexed and conflicted rather than bullish or bearish. I think the views of you guys kind of outline that. Julie, if that's the case, what kind of volatility are we in for next year?
I think volatility hopefully will be driven less by what's going on with the variant and much more what's going on with business fundamentals. And I think it's less about style, growth versus value. And I think it's much more about what's happening with each individual business's ability to deal with higher costs, higher challenges with interest rates, and what that means for consumer spending. And so I think it's really important to be able to look at businesses on an individual case-by-case basis. And for us, we're choosing quality businesses that have good cash flow generation, solid business prospects, and mostly earning stability.
Well, let's get to that, because we did see in the GDP sort of corporate profits come in a little bit lighter. There was a resurgence of COVID cases, and that still remains that headwind for economic growth. Third quarter GDP figures showing a significant slowdown from a 6 handle in the second quarter, although the last revision was revised upward from the second revision. Ira Jersey of Bloomberg Intelligence joins us now to help break down all of these numbers. Hey, Ira.
Hey, good morning.
So tell me, what did you make of the numbers? What's the good? What's the bad?
So I think there's three big takeaways here. So even though the headline number was a little bit better than expected, with personal consumption up a couple of tenths compared to the first revision, the mix still wasn't very good. You had a significantly lower goods GDP. So goods was a drag on this number, whereas services were kept up reasonably well in 3Q. And, you know, that could change pretty significantly if we do have slowdown in hospitality and leisure, which was a big contributor to GDP this month. Two other things to take note of. One is when you look at the GDP price deflator, so this is the inflation component in the GDP report, you saw a big gap open up between core and headline inflation. So you had core inflation actually down about 1.5% from the second quarter, and meanwhile you still had headline inflation still very high, and that's reflective of what's gone on with the energy market, with oil prices down 10% since the end of the quarter since the end of the third quarter. You could expect that headline number to catch down to the core number. And then finally, and I think this is very important to a lot of our viewers here on Bloomberg Television, is that corporate profits only grew at 1.2% in the third quarter. That compares to an average of 11% for the first half of the year. So that's not a great sign if that is maintained and you have margins being squeezed because of these higher input prices. Will that continue in the fourth quarter? Better question for my colleague Gina Martin Adams, but I think a very important thing to watch when we get the first revision of the fourth quarter data a month from now.
100%, and that comes as we have valuation questions and then Omicron. Hey, Ira, thanks a lot. Really appreciate it. Ira Jersey joining us. Let's dig deeper into that. Chris Harvey of Wells Fargo recommends investors reassess risk into the recovery.
In the second year of a recovery, typically you see multiple compression. You've squeezed a lot of the juice out of this trade. You're going to decelerate. The Fed is going to be more aggressive. I've never seen the kind of pricing power corporations have, and my career spans over 2 decades. We're probably going to see peak pricing, which means we'll likely see peak margins and peak multiples. That all tells you it's time to re-risk.
All right, let's get back to our panel here. Hey, Jay, you were sort of selling the rumor, buying the news. So what do you do if we have seen a peak in corporate margins and corporate profits in the third quarter have started to roll over a bit?
Well,
And we're back. We're back, team. We're back. Nice coffee. Ooh, got the old French press on. That's good. And look what happened, you see? Look what happened while I was away. As I said, you had that little spike, 2 p.m, and look at gold. Gold, you could have scalped that between that blue resistance level it broke and our breakout zone. So that was a perfect. And also, it's going, as we said, it's going the way of the news, which was good, as you'd expect it to drop. So that was nice to watch. And with US-30, exactly as we said, it's found a heavy support zone. Back into the neutral zone, just about. And so we can look to take buys once this goes green and breaks the zone here. But yeah, we've got about 20 minutes till the open. We're going to look to take buys on the US-30 and sells on gold. So we don't want this pushing too high, taking the momentum out of the trade. Obviously this wants to come back down again a little bit. We'll just watch it and see.
Since the spring of 2020, the bottom of the first COVID wave. That's, to me, is way overdone. All that cash is going to have to be put to work.
That's a good question. When do you put the cash
Yeah,
to work?
resist the gamble. That's exactly right. You don't gamble. Never assume.
Keep buying right now. I mean, we have a fairly optimistic outlook next year when it comes to the equity market. We have a S&P 500 target of 50-50. A couple of things that were just talked about. First of all, I agree with that third quarter GDP number. That's kind of old news, right? I mean, if you think back, that's looking at data that was actually taking effect back in July. That was a long time ago. And I do think the fourth quarter is going to be much better when we get the actual results for those numbers. I think the other thing that's important that we've been looking at is that inflation is kind of the gift that'll keep giving. If we were sitting here 6 months ago, everybody was afraid of inflation. And what happened? The markets have gone much higher and interest rates haven't done much. In the meantime, you've seen record corporate profits because margins have been healthy because of inflation. If you look at what happened down in Washington, one of the reasons why those tax hikes have been taken off the table is because of inflation. And then we've seen higher wages, which has been helpful to the economy. Next year, though, I think inflation starts to accelerate. And if that is the case, that'll be the gift that keeps giving, because that'll allow the Fed maximum flexibility in raising interest rates. And I think they might actually raise less than what people are expecting, which would be a positive.
So just to be clear, Larry, it seems like you think that...
See if it breaks this neutral zone or hangs on. So you've got a chance of some in here. And 100 points, easy.
Is that what I'm getting from you?
I just wait. Wait, there's no panic. It's going to form that nice W. Could resist off here, then we get a buy. That's what we're looking for in 20 minutes time.
So I don't look for margins to retract significantly.
We look at oil. Oil, yeah, whipsawed. Look on all that news, up and down. This is why, you know, I don't trade on news events apart from that its own news events. Very unpredictable, but we would have caught that sell. I know when yeah, how the news performs with it on oil, say it's quite a big jump. As you can see now, about 48 minutes till the next news comes out, which is the existing home sales, which is the high impact news of the day, and along with the consumer confidence for December as well. Their predictions to be a bit higher, but I think that's going to be worse than expected with Omicron. Obviously, this was done a month previous.
To buy is focus on businesses on a case-by-case basis.
I'd be very surprised if that goes up to 110.
There are positive indicators in terms of businesses being able to
Here they've 109, 110 expected to be go up, but I don't see that. Maybe I'm wrong. But, so that could be worse than expected, and home sales, I suspect, and they're assuming it's going right up. Look in November on existing month on month.
I mean, it's like more red flags than most of my ex-boyfriends.
2.7, 6.52 again. It's all unexpected is bullish. You know what I mean? So there's no an easy one to trade, but again, you know, I suspect that could be lower than expected. We'll see. Again, all three go red, you know what we're looking to do. All three go green, you know what we're looking to do. It's when it's mixed, you have to pick the one, the high impact one obviously should be the drivers on this. And then we've got the oil and gas. Gas is obviously in focus at the moment as well. Have a quick look at our crypto.
Yeah, no, totally. I mean, I'm on.
Got some green on the screen at last. Bitcoin's back up to about 50. Even Shiba's pulled back some.
April of next year, inflation goes from 7% to 3%. The Fed is going to end its tapering.
So this is good. And again, in the new year, we'll be doing more crypto analysis and using Axe trading system on a bigger time scale than 3 minutes, obviously.
Previous guest said, probably going to have fewer hikes. I think the Fed has been.
So 48, it's dipped a little bit, gone up to that 49. 50k is the big level.
Two questions. One, what does the post-COVID economic narrative look like? And that's why markets have been ranging.
Anyway, let's check the news as well.
And then two, are the things the
Had
under the radar
bought it.
Stuff? Is it beginning a bear market or beginning a bull market?
There's
Many things,
revision.
China tech, biotech, the ARC stuff.
Fresh evidence is expected to show that Omicron is not as dangerous. So this is the news you've got to watch out for.
Bids in the last couple of days. So I think
Then markets higher could drop gold.
it's a year of clarity, and I'm particularly focused on the non-US markets in Asia, and in particular.
The UK, yeah, we've reduced the self-isolation period to 7 days. And here we go. Gee, this is what we traded.
You all will be sticking with me. Coming up, we'll talk more about Julie's red flags boyfriends, plus DC tempering
Slowed.
fears preparing to deliver treatment pills early next year. That conversation
Data on mortgage and existing home sales also due, and the consumer. So this is, it's all on here. Look, all for you to search. Mortgage applications, new home sales, you see. Looking to be better than expected across the board. So bloody move kicks in for stocks, of course. Energy markets, we know about that, and oil as well. Inventory. So edged higher. And we're going to get to see the barrels this week and see if we can get a final trade on this. Be a nice one to trade that.
when your shares are down 20%.
So all this is always worth looking at. I'm going to push that into my group. Guys, there, read it. Gives you an idea of what to trade or what to avoid.
Going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
This is a market that over the past few weeks has made it clear it wants to go
Let's have a
higher.
US-30. Yeah, as I said, look, wasn't a buy, just rejected out of our neutral zone. It's a good thing about it. It's worked so well. You just got to sit on your hands, be patient, and not take the risk. Sorry for my creaking chair. Right.
We should all be concerned about Omicron, but not panic.
We are taking Omicron very seriously.
We continue to monitor right.
Omicron very closely. But at the same time, we are confident that we'll be able to continue to ensure we can face down the most recent challenge.
We don't think today that there is enough evidence to justify any tougher measures before Christmas.
If you're fully vaccinated, and especially if you got your booster shot, you are highly protected.
Those are world leaders tempering fears of returning to tighter pandemic measures, and this comes as the Biden administration plans to deliver $4 million treatment. For more, Bloomberg's Emily Wilkins joins us now from D.C. Emily, give us the latest.
So we know that the Biden administration is preparing, as you said, 4 million different treatments by the end of January. That's going to include things like those antiviral pills, those COVID pills that we've heard so much about, and other treatments that are just going to help doctors be able to really treat patients who come in who already have COVID and make sure that the situation doesn't get any worse. This is coming as the Biden administration has also announced a number of other initiatives that includes sending military personnel to hospitals that are overwhelmed and understaffed, as well as releasing 500 million testing kits for Americans that the federal government will ship for free to their homes. That's not going to come into place until January, but it's coming at a point where testing lines are getting very long. People are unable to find.
Yeah, rejected. So it's forming that nice W. In fact, we're just going to draw that now. Just watching it react.
Three-fourths of all cases are now related to the Omicron variant.
Yeah, so fast it spread. All right, Emily, thanks a lot. Appreciate it. And all this having implications, of course, for that return to office.
I say, but we're going to get a boost on the open. That's what I want to see.
Is mounting Omicron headwind, slashing its allocation to stocks down to neutral, and writing, quote, the risk is considerable that the U.S. as well
And retesting our resistance zone here.
Not be able to avoid stringent lockdowns, facing a situation in which the growth prospects are waning while central banks are forced to tighten liquidity at the same time. Julie Bill, Larry Adam, and Jay Pulaski still with me. Larry and Jay, I feel like this flies a little bit in opposition to what you guys were saying. Larry, in that perspective, let's do the value versus growth conversation. If we're looking at potential lockdowns, even just from people doing it themselves, is it value versus growth? Larry?
So again, by our sector calls, we're a little bit balanced by both. You know, we do like consumer discretionary, and we like communication services, which is more growth, but we then also like some value, which is financials and energy, with the expectation that you're not going to see a long-lasting impact from this variant, and that should continue to boost these equity markets higher. I think you're seeing right now that you are going to see these numbers start to fall probably in January, and I think making those rash decisions to cut back on equities now is ultimately going to prove, as Jay said, it's a two-sided decision, right? You have to get out first, then you have to get back in. So I'm still more optimistic on the outlook, and I think that this particular wave could potentially set up for a transition more to an endemic stage, because if as many people do catch this virus as what people are expecting, that could leave a lot of people with some form of either natural or vaccine protection going forward.
Hey, Julie, value versus growth.
You know, we don't think that that's really the question. The question is quality or not. And we think quality is really the place to be, because you can find businesses that have opportunities in a reopening. A business I would think of is Fair Isaac, right? Where if there's a stronger reopening, more people are going to pull credit scores. But if there isn't and there's more work from home, businesses are digitizing using FICO's technology. And so you're kind of on both sides. And those are the types of businesses that we really like, ones that can do well in good times and bad, because then we don't have to make a decision of when to get in and when to get out. We can just be long-term holders.
That's a fair
I'm
point.
just like, I'm lazy. I can't make the right choices.
Lies. She's a tiny human at home. That is lies. Hey, Jay.
Gold as well, look, to set up nicely. Remember, we're going to be looking to take a sell. Then we want to come back down to this zone here for our trade. And again, yeah, look, be within 100, 50 to 100. Here is your ultimate goal, is our flat baseline, just above there, look. So I'm going to mark that as it's open.
I think we're in the early stages of an above trend growth.
About 6-7 minutes to go. I'll place some trades.
Globally for the next couple of years, and I think very importantly, we're going to have.
And again, if you're taking a sell on here, where's your stop loss going to be? Above this heavy resistance zone on our points of interest. So from that, you can work out your percentage of your accounts, your lot size, everything. But you need to have a firm idea of your stop loss level, then you work everything else out. You don't do the opposite, so that's the way to do it. If you want to walk away from the chart and leave it, a stop loss would be here, your TP would be around here, and whatever it is whatever it is, and you adjust, you use your account size accordingly to get your risk right. Go to the 30, and obviously I'm looking for
buybacks hitting a record as capital expenditures remain below pre-pandemic levels.
and let's have a look, see where we are. We're just looking red here, so there you go. That's what we want to be for our TP. Let's see if that happened. Could be a spike, could be a full candle, doesn't really matter as long as it hits it. My thoughts for US Open. Make sure we're logged in. Good. Use back in.
The 13th round of talks have ended in a stalemate. As the winters creep into the Himalayas, both sides have reinforced, and soldiers are hunkering down.
Let's see, it's going to get a quick spike for a buy and then drop and then form, and then we'll go for buys again to catch this second leg. Depending on the news, obviously. This is outside the news. I'm just looking at the TA on it. I'm sure price will want to get back and retest the neutral pivot point zone here and our blue zone here. So it could be just a case of it going to here, a case of going to here. Matter. Once it gets out of our breakout zone, then we know it's into a decent buy area. But at the moment you can see the overall thing has been a range. When you zoom out, this is what our breakout zone indicates. Look, here's the bottom of the breakout zone, here's the top. Most traders would just wait on a bigger time frame until these areas are broken, and then you just sat waiting for trades days on end. Whereas with this system, look, this enables us to trade a bigger range.
This is the countdown to the open. Quick look here at equity futures, trading a little bit heavy today. ISB futures off by 1/10 of 1%, but I gotta say, volume super light. We closed with super light volume yesterday. Yep. European volume very, very light. So you can expect that holiday trading to really permeate throughout the trading day today. One asset class I did want to focus on is the currency market, particularly a 3-day chart of euro dollar. And you can see the climb that we've seen in the euro That's the longest rallying streak we've seen since early November. Are we reversing the strong dollar story, or is this a temporary pause? We thought we were in a central bank divergence story with the Fed a little bit more hawkish, the ECB dovish, but that does not seem to be reflected right now in the currency market. Yields up meaningfully over in Europe. All right, time now for those morning calls. Let's look at some of the analyst recommendations now on Wall Street this morning. First up, Stifel upgrading Darden Restaurants to a buy. The analyst touting the stock's attractive valuation with its new incoming CEO, fueling further optimism. Next up, you got Citigroup raising its Apple price target up to $200. The analyst seeing multiple near-term catalysts, including the launch of its virtual reality headset. And finally, Bernstein upgrading Caterpillar to outperform with a $240 price target. The analyst expecting shares to be the biggest beneficiary of looser monetary policy with China. Those are some of the stocks we're watching into the open here. So coming up, companies rewarding their shareholders quite handsomely. We have a record quarter for U.S. buybacks. We're going to talk about if that can actually continue. That's coming up next, right after the opening bell. Like I mentioned, S&P futures off by about 0.1%. The bond market pretty much goes nowhere, but yields higher. Sell-off a little bit happening over in Europe as ECB warns on inflation and power prices shoot a lot higher. But here the news flow relatively
about 3 minutes away.
right above 20. So there's
You can just sit around, drink the coffee, watch the news.
meaningfully lower than we were on Monday. The opening bell is up next. We'll have all the numbers for you. This is Bloomberg.
US-30, exactly where we need it to be. Up, but again, one. We go back to here, look. Break our zone. Now look. Adjust. Same pattern, same thing we're looking for, but we're looking for a nice, like, look, open. Right, do it. So we're already in profit in gold. In fact, I'm going to take that. It's already $80, so good on this sell on gold. Already dropping, so I'm going to go back in again. Sometimes you just got to take what's there and mess around. Go back in again. That's what's US-30. That's 2 wins on gold already. Yeah, I got a 20 and a 25, so I got $65 there. Like 30 seconds before the open. So I'll put the sells in and hit it. So we go. Let's see what happens with US-30. Good luck, everybody.
For investors who can navigate this landscape, leveraging gold, a strategic and sustainable
About 30 seconds to go.
The path is gilded with the potential for rich returns.
Remember, if you miss the initial moves, then obviously you can always go back in again. So we're already in profit on US-30. See it spin around a little bit. See what we get. Back up. Remember, they've got the news coming up in 15 minutes as well. RSI is 56. Got 32 and 30, brilliant. That was nearly $100 there. Hit our TP, as you can see, perfectly.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
neutral though on the S&P. Russell taking a little bit of a break, down by about 0.1%. The Nasdaq trading heavy here as well. There's the opening bell. It's going to be a light volume day. It's going to be really difficult to
Well, we look like volume days if they get us wins like this.
over the next 48 hours. I'm still looking at the euro, building on those gains. Third day of gains. Haven't seen
Perfect.
since the beginning of November. A slight bid now coming in the treasury market. That's a bit different than what we're seeing over in Europe. We're still seeing some selling. And commodities sort of moving a little bit higher as well. But again, not necessarily price action.
There you go. Look at that beautiful spike on the USA. Amazing. Gold's ranging up. This is a good time to get a position in.
We saw 2021 as really a year of upside surprises. So upside surprises too.
I've closed on positions on US-30. Get those ones. Waiting to see if we get a drop now on gold. I'm just going
the risks are more balanced. Obviously,
our
people
zone here.
attention to the prospect of monetary tightening, of the Omicron impact on the economy, at least in the first part of the year, and on the lack of fiscal stimulus.
50 to 1.
Jay Pulaski and Larry Adams still with us. You guys, we already answered this question in terms of what happens to monetary policy for next year. And now I want to understand.
RSI 58, just crossing our neutral zone now, just pushing down. So I'd like to see.
If you're more constructive, I know you want to be in, you're looking elsewhere. What's your number one pick here in the U.S.?
Number one pick here in the
Dips
U.S.
down to 57. Just little moves, all you need.
With the cyclical and value trade. Look, I want to take a step back and tie together a couple of things you mentioned. First of all, the dollar and the euro. I think we're at peak Fed hawkishness. We're also at the beginning of an easing cycle for the
Done.
PBOs.
Yes, closed all four. There you go. Done. I was 33, 35, 21 and 24. So that was another, it's about another $140 there. Done. That, ladies and gentlemen, is how you trade the open. Based on news events. Bang.
That's particularly good for risk and good for risk assets outside the U.S., good for commodities. Commodities play into that cyclical value with the energy side, with financials. And so I think you get a steepening yield curve, very good for financials. They've sold off. You have better demand for commodities, very good for energy, which is also sold off. These are things that are down 15, 20%. And right this moment, I
There's the drop. Look at that beautiful thing.
looking at things like jets.
Get out on the TP.
The biotech. As I said, the stuff that's been really blasted, that's down 60%
Perfect.
over the last 6 to 9 months, that's where I think people should be looking and buying in this period before we get to pick up into liquidity. Q4 earnings are going to be awesome. I don't think you can wait until early January. I think that's going to be, in hindsight, would be a mistake.
It kind of makes sense when you saw a Carnival rally earlier this week.
And there you go. How easy was that? RSI now crept into the neutral zone. We're already out. We're already done. We've already took $125. And that's the open. Was it? And we did 1, 2, 3, 4, 5, 6, 7, 8. 8 trades there. Between 1 minute before the open and now, which we're 3 minutes. So 4 minutes of trading. And we managed to gather the best part of 200 plus probably about $250. Nearly $300 there. Done in 3 minutes. This is what I'm talking about. True scalping.
However, if you're taking a look at the Fed and maybe you're seeing a mixed dollar, even a weaker dollar, as Jay suggested, what's a pick for that?
Well, I think the important thing to think about with the Fed is that it's not always just up to the Fed, right? If inflation super overheats, it's going to force the Fed's hand. And I appreciate that Omicron is less lethal maybe than Delta. But the thing is that most of our goods, which have been driving price increases, are produced in zero COVID
Pleased with that.
countries. And so every time there's a factory closure for COVID,
And let's go back to US-30 and have a look. Yeah, look at that. Perfect. Rejected. Have our neutral resistance.
Whether or not they get to raise or stay put, it's really going to be driven by inflation. So our concerns are still about pricing power, and that's where we want to protect ourselves the most.
Great for back testing if you put everything on your chart and you can see exactly what works and what doesn't work, and that's how you learn. It's going to reject off here. Look, you could get a sell in now. Tempted. Close to that news event, isn't it? 30. So I just did.
Are resolved and inventories are rebuilt should look
see a big dip like that. I'm going to push back up.
Generally speaking, we don't like
Get
banks
$10
because it's
from
hard to have competitive differentiation in banks. I think what I prefer are companies that are serving the banks because those are the ones that really need to be spending money in terms of being able to attract consumers, hold consumers.
RSI.
Not attracting them with branches anymore. It's more technology. A company like Encino is one that helps
On that W, you see, that's center line W.
customer-facing
Right.
technology, and I think that is a much more interesting play than owning the banks outright.
All right, let's get deeper into that.
Now we've got the news coming up next. Let's have a look where we are.
In terms of the banks, is the amount that they could actually buy back in terms of shares, at least a potential catalyst for the European banks.
23 minutes, the existing home sales, which I think is going to be worse than expected. So we could look at getting more sales in on US-30. Trade gold in the reverse, of course, if that's what you want to do. Consumer confidence, I also think it's going to be lower. And then we've got oil. So this is a great time. Let's have a look at this pushback on this. Look, RSI 57. Again, tempted to get in on this and get some pips. This little center W. You can see rejected out of that. Again, pull our trend line. That would be nice. Then after the news is gone, we might get a retest again. Like I say, it retested our blue zone. What did I say? I said it would retest that zone. It's the same W pattern, just a little bit higher than what we expected. Right, here we go.
I should say the S&P 500 buyback index, which is an orange here, measures the performance of the top 100 stocks.
See if we can get anything on this one.
That is up about 29% over the course of this year, relative to just the 24% gain for the S&P 500, Alex. All right, Kaylee, thanks so much. Really good setup for us. Well, Bank of America anticipates some corporate action ahead of the potential tax changes, saying that corporate client share buybacks accelerated to their highest weekly level in just over a year, suggesting some pull forward in executions ahead of potential tax changes. Let's get back to our panel here with Julie, Jay, and Larry. Larry, you're all in here. You love the U.S.
A couple of small losses there just because my broker didn't execute. Sometimes you get that, you see. You get the right side and you just don't get the execution time. But I got in on that. What did I get? So I got... I took a loss of $4 and a loss of $7. Then I won $3. I won $50 and then I won $30. So there you go. You know, just post that so you can see then the losses there purely just execution time. By the time I'd executed the trade, sometimes I put TPs in, sometimes I just go manually if I'm watching. So
by the way, the penalty for those buybacks is going to be like 1%. I think that's peanuts compared to the benefit that they get on their earnings and what they can do with their cash. So I think you'll continue to see those buybacks continue into next year.
Jay, what do you think?
I'm too quick for the broker.
Yeah, I totally agree. There's tons of cash on balance sheets. Buybacks are going to happen in the U.S. They're also happening again globally in Europe and Japan in particular. I want to pick up on the CapEx point.
But we're still up. You know, we're well up. That's the thing there. You know, double another 50 on that trade here. Look, now it's reversed up. I just caught that little, saw a little dip and got in on it. And now we're just going to sit and wait for the news.
Demand, whether infrastructure or climate, for CapEx, and I think you can tie that into a product.
Like I say, I have a feeling it's going to be worse, but who knows? Gamble it. Gold, look, there you go, selling off perfectly. As we said it would. We said it would sell off on the opens, even if you know, were confused by the news. It goes opposite to the news. It broke out of our zone, look, and it's come down and hit our next grid system TP. Look, you'd have hit that a few minutes ago. Again, you could just ride this grid like a ladder, up and down. You know, I only flit around to show for YouTube and for guys in the group, but literally I can sit on one thing all day and make my week's money. And you know, that's the whole thing. You get so confused trading. There's so many things to trade. You just want to trade everything. Understand that. I've done that. You know, you get so excited. You just don't want to sit waiting on one particular thing, but that's what you have to learn to do.
In the thematic sector is where your opportunity set is, and those things have been hit really hard with
Got to learn to be patient.
So that, to me, as I said earlier,
US-30 look just rejecting again a little bit here.
Or a bear market. Some people think it's the start of a bear market. I think it's the start of
Be nice if it pushes down.
a Fed risk that's been discounted.
Get over $10, $15 out of this.
That one could look for next
All about adding up
in terms of total returns.
the bigger picture. And we did, yes. We did it. What did I get? Yay, £18.35, $25. There you go. Look at that. Well, I was talking to you 20 seconds. Proper scalping again. I just sold the movement on that.
One place that I think is a real opportunity is we've all realized that supply chains for the last 20 years have been built to have the absolute minimum amount of inventory and the minimum amount of cost. And we've seen
Just on that spike, look. You can see it. You can zoom in. I like watching when it get moves on the RSI. Look at that spike, you see. Beautiful. Read that both ways. It's perfect. Market's just waiting for its news and decides if it bounced off our... You're not going to go any lower than our baseline, right, and the trend line. You can scalp this little bit here. That's it, you know, and you can get... Again, look, there's more than enough. If we're in 100 points, I'm happy. That's coming down, look. Perfect. So it's forming this center W, just as I'm saying.
I think, you know, when it comes to logistics and transportation, I think there's real opportunities there. But I think even the technology around supply chains is actually quite critical, right? Because it
That's why I wish more people would watch, because I want to teach you how to do this and earn your money and get out. We'll get there. We'll get there. People will pick up on us. Just trade differently to everybody else, I suppose.
Their production. Are you playing that in any way?
So gold, yeah, it's coming down. Look, hitting our TP. This is perfect. RSI, again, you know what to do. You've got a lot of zones here that it's got to overcome, but you could still, if the RSI gets down to 25, get in for a sell. I would not take any positions on this at the moment. That's for sure. You just got to wait now because we've got the news. Got the news coming in 16 minutes. Existing home sales. Market's predicting better new mortgages and in home sales. I'm thinking it's not going to be that, but I don't know. You know, who knows? Who knows?
Just anecdotally, guys, I ordered a pair of sheets April 25th, and I just got them delivered to my house yesterday. Let's just all take a moment. Happy holidays. I mean, and these weren't special sheets. These were like cotton sheets. All right, guys, thanks a lot. Julie Beal, Jay Pulaski, Larry Adam. Really good to talk to you guys. Appreciate that. Coming up, we're going to get more from down in Washington, D.C. President Biden still remains optimistic over the fate of his $2 trillion economic plan. More on that next. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Get ready, 14 minutes to go. So US-30, keep on that. Yeah, look, see, ranging around center W. It's exactly what we expect. You know, I know it's boring to watch, but you want to be right with your TA. When the TA is on point, it gives you more confidence. You can see there, this is great. The neutral resistance zone is holding up. And on the news, we're going to get a blast up or a blast down and a bounce off our trend line.
There's multiple places where we think this technology can be applied, perhaps in
Open.
Driving or commanding.
What's clean? And this TP now really is kind of invalid because we don't know where the news is going to go. It's pushed down now, look. Push down. If RSI gets into that zone, gets below here, you can take the sell. It's going to bounce off our POA. It's risky, these ones. These are the ones where you've got to get in and out, get the green, get out. Don't worry if it's only $4, $5, $6, doesn't matter. But if you want to do it, you can.
Get things done. I still think there's a possibility of getting Build Back Better done. Imagine being a parent, looking at a child you can't afford. You have no house to borrow against. You have no savings. It's wrong. But all the things in that bill are going to reduce prices and costs for middle class and working class people.
President Biden striking an optimistic tone on a potential Build Back Better deal. This is Senate Majority Leader Chuck Schumer convened a virtual meeting of key lawmakers last night to discuss the economic agenda revival. Bloomberg's Josh Wingrove joins us now from D.C. Hey, Josh, was Joe Manchin at this meeting?
Going to be interesting. We've got 10 minutes to go, so we'll just continue watching US-30. Nice, look at this, look. See how it's filling. Beautiful, our pattern now, look at this. Some people like trading these ones. Yes, I've just traded it, so I'm not going to go in again. Again, neutral zone. Is it going to bounce off our average neutral resistance RSI line here? Look, bounce up again. It's setting up perfectly for either a continuation of the sell on the news, where it could come down to here. Double tap on the bottom. Nice double bottom. Or is it just going to be? No, it looks like it is. It looks like it is. Look at this. Beautiful. Beautiful. Looking good.
Supply chain updates. They are taking a bit of a victory lap on that.
Broker's so slow.
Things are moving a little better, so they'll be talking about that. And of course, today they will be watching for the authorization, which we expect as soon as today, of those Pfizer and Merck COVID pills, those treatments for people that have severe cases or at severe risk.
Slow in executing, you see, that's the problem sometimes.
That as well, but as for Manchin, I think to the new year, you know, we'll see.
Brilliant, we've got it. We've got one position there. We took it. Yay, £31. So that's about $50. There you go. I was talking to you. This is how you can do it. Quick little scalp. Or
every month it gets harder. You know, in the winter and into the spring, you're
use.
Certainly by the time summer comes, I don't think that they would expect any movement at all. So, you know, this gives them a window, but a shrinking window. And, you know, as we say, Biden says he wants to get something done. If you're Democrats, you know, you might be optimistic that things are going to go well in the midterms, but as of now, the sort of external view is that it's not going to go that well. In particular, they're going to lose the House. So the window is closing. The question for Joe Biden is essentially
beautiful. Look at that.
It might be what you're going to
perfect.
Do. So do you take what you can get, or do you hold off and risk getting nothing?
Yep, it looks like that's really also the question for the progressives. Josh, thanks a lot. Josh Wingrove joining us there. At the same time, the White House is preparing
candle.
the private sector on supply.
Yeah, and it's done. It's retouched. It's a double bottom. It's touched down. Heavy support zone and now bounce back. That's either going to break it and be a continuation. Get rid of this leg for now.
They're going to be talking a little bit about the supply chain. They're going to be meeting with top White House officials who have really been working on some of these.
Get rid of this whole
backup.
now.
And they're also just going
See
to
it.
where
To use things for the news.
to do. We've seen the White House
You can see the gist of it. What I'm looking at. A second trading. It happens, but I want a clean chart. There you go. Look, so now you can see it much better. Beautiful. So I just nipped in. So it's sort of, why did I get in on that trade? Well, one, the power of the candle. And this is Hakanashi, but you can still read them. That's what I like about them. You know, I saw the RSI dip below our average line. The trend line was broken, and I was in, and it was about 50, about 6-7 pips, but that got me $50. That's totally fine in a volatile move in the center of a W. You know, as we're about to have some news events. We go, look, broke down. You can see it could hold it more, but it hit our heavy support zone, so don't want to risk it. You know, I hate these gurus and mentors who say about, you know, not holding your trades and all the rest of that, but the more you're in the market, the more you're exposed to things going wrong. Multiple trading, bits and pieces is way better than risking it all on one long trade. That's just my personal view on it. That's, you know, if I'm in and out of the game, I'm in and out of the game, you know. It doesn't make me a bad trader. There's a time and a place for holding, really holding. Right now is not it for me.
We are keeping an eye out for news on what that could mean. That could certainly play into exactly what happens with a number of these companies going forward.
So we've got news coming up again. Sells would be if the RSI hits our oversize. You can see here, look, you could have had 1 sell, 2 sells here, look, nice and easy. More here earlier on as well, look, another sell there. As soon as it hits this first part of our oversold, we're a continuation.
The companies that are going, what do they want to get out of this? Like, what do they want from the administration?
Well, I think they want the administration to continue to focus on these bottlenecks.
News coming up in 7 minutes time. Consumer confidence, and if you look again, it will tell you no one here. Higher than expected figure, positive. They're expected to be higher, which is great because also they're expecting the homes news to be better as well. So we'll either go with the direction if it is all good, or we'll go the opposite if it's all bad. You know, whichever way, I think hopefully all 3 news results will be the same direction. You know, not a mixed report. We'll settle back for the last 30 minutes to trade the IA oil. That's been a nice little session.
All right, Emily, thanks a lot. Really appreciate it. Emily,
in a market where most people don't trade. You know, people say it's slow. We're just proving you can do this.
is here to take us through it. Hey, Katie.
Hey, Alex. Well, the moves aren't huge, but about 20 minutes into trading, it looks like a pretty even split on the sector level. Definitely not the sea of green that we saw yesterday. You have energy, consumer staples at the bottom of the pile. Meanwhile, consumer discretionary at the top of the leaderboard there. That's thanks to an early bounce in Tesla up over 4%. And let's stick with cars, take a closer look at autos, because that sector up nearly 180% since the pandemic began. That's really when used car prices started taking off, and autos look set to build on that rally today. That's after CarMax beat on third quarter EPS and sales. That's giving a boost to other car dealers such as AutoNation and Sonic Automotive. Alex.
All right, Katie, thanks a lot. Really appreciate it going through there. Volume, like you said, pretty light. Coming up, all the market moving events you need to be watching. There's stuff. Still stay tuned in our trading diary next. This is Bloomberg.
Look, on Bloomberg, I'm looking at flat DAX now, but sees a break even. Fairly flat. So we like to see these figures when they're above 1%. Like to start thinking about going in the reverse directions on these indices. It just helps my analysis. So we've got 4 minutes to go. Existing home sales and consumer confidence approaching. Like I say, you can go reverse on gold. C is a nice re-entry. I didn't take that because we're so close to news, but you could have got in on this. Look, they hit the oversold, bang, easy trade. Form that. Here's your W, look, bang, bang, bang. Second leg. Here's your M, bang, bang, bang. Again, you can just see these patterns repeating themselves.
households invest. We like to get that number up to 95+%. Investing
Beautiful. Nice scalp. And US-30, yeah, just ranging as it said. Look, it's forming that W.
Market action over the next 48 hours. In other asset classes, though, this is what I want to pay attention to. I've been mentioning it all day. Euro dollar 113 handle, third day rally. Haven't seen that since beginning of November. You can see the split here in what's happening in the bond market. U.S. bond market goes nowhere. In Germany, you're seeing some selling. In the 10-year, you have yields up by 2 basis points. Italy yields up by about 5 basis points. There's some action there. If you may see an ECB get a little bit more aggressive if inflation keeps ticking up. All right, time now for the trading diary. What you need to be watching for the rest of the week. There's stuff. You get U.S. consumer confidence data. That's coming at the top of the hour. Plus, President Biden meeting with his supply chain task force and CEOs at 10:30 Eastern time, and a host of economic data.
Tomorrow, the jobless claims, as we know.
Jobless claims, personal income, spending, and the UMISH survey.
And that's it, and that's the end.
Holiday on Friday.
Till next week.
Countdown to the open. I'm Alex Steele. This is Bloomberg.
Hey guys, let's have a look. Let's get ready. 2 minutes to go. Like I say, it's up to you guys which one you stick on, US-30 or gold. We're going on US-30, I think, on this. Depending on the result. Remember to go reverse with gold, of course. See if we can finish strong. We've just got the oil trade. So far, so good. Just over a minute to go. Tomorrow we've got the durable goods as well, which is always a nice trade. Personal income, jobless claims, so another good news day tomorrow. Or homes news as well. So.
When you talk about the commercial viability, the idea that these companies can
Countdown is starting.
off of this here, does this become, I guess, something that's niche in the sense that you have to pay several $100,000 to do it, or does it come back down to a level where just regular folks like you and me will somehow find a way to be able to take a trip up, and this can be a business model that will be sustained?
I think it's important to note that space tourism is a small segment of the overall global space economy. Space tourism accounts for $1 billion of a global $350 billion global space economy.
What's the rest of it?
260
40 seconds.
satellites, manufacturing them, launching them, and these satellites we use in our
Good luck, true Scalpers.
listen to the radio,
It's real.
to watch Bloomberg on our satellite television, or to navigate us to our destination via GPS. And I hope in the near-term future, we will add getting our internet from space.
Left. There we go. Let's see. Home sales worse than expected. Consumer confidence is good, so it's a mixed result. So existing home sales, well, I'm going to go with that. Let's have a look at existing home sales. Look at that. You can see here. So we should be able to go both ways on this. See if we get gold, consumer confidence. Good. There you go. So consumer confidence on. Better than expected.
Huge swaths of the island are still without power, running water, or access to medical care. Experts experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response
Perfect, look at that.
to recent disasters.
The conference one.
But recovery from a disaster of this complexity and scale has proved more challenging than
Get the cell on the back of this as well. Remember, it's going to push it. It's going to pull back down again.
falls on the private citizens.
That as well, because really messing me around.
Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side.
See what gold's doing as well. There you go. Look at that.
Time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds
Perfect on gold.
humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see 2 Puerto Ricos. We're here
Results look all come in. Consumer confidence is way better than expected. Existing homes was roundabout. Still worse than expected.
They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Gonna end my trades.
He's put together a boots on the ground mission.
And gold. Come out there. Brilliant. Waiting for the others to hit as well. Go in both directions on this one. That was the good thing about it. Got 40, 40, 40 and 30 on those ones there.
Northeast region of Utuado for some people that are in need of urgent medical assistance.
With gold we did.
As a physician from San Juan, she filled a van with medical supplies at her own expense and brought along a team.
Those me gold trades.
Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this.
Now let's see on 30. Let's look. Up. Going to hit that resistance where we can launch some cells in.
And he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm. So he's
Gold, perfect. It was perfect. Look at that.
Medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken.
Yeah, news worse than expected overall. So
take off. These guys get left at.
this was the one. A high impact. Are you looking for buys on gold, sells on US-30, gold, spot on, US-30, got up, ignored it, now we'll look to take sells off the back of this resistance here. US-30 has gone with the consumer confidence, gold's more likely on with home sales. So again, shame it's mixed, you know, like it was before, but this is how you can get around it. You can usually go in both directions with this news here, but just pick the one, stick with it. So just waiting to see if we get a drop on US-30 now. Look at the price action. Yeah. Or a size 64. Obviously breaks here and goes 75, we'll go some buys. Great on gold. I went in on gold there, and I got 1, 2, 3, 4 buys, all on that, based on the fact that the majority of the news was worse than expected. Gold shot up. There you go.
He created his own maps to survey storm damage, and delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself.
If gold dips down, we'll go for a sell on gold. We managed to get, like I say, another 100 plus about $150 on that. So.
We're able to resolve problems at a different level.
Okay, US-30 now looks like it is dipping. Here we go. Yeah, just rejected. There's the wick down. Look, that's what I like to see. Let's see if we can get a couple of trades on this.
Probably we are the first health team
to come and visit this family. Muy bien, todo muy bien. The patient has Down syndrome.
Watch.
He is all day in bed. The difficulty with this is the patient cannot be alone.
So I look, so he's just rejected off that level here. Look at that, you see? Yeah, if you don't believe in support and resistance levels for RSI, I do, because look at that, just a line across there, look. That. Rejected here. Broke there. Rejected and broke here, look. Rejected, rejected, rejected. There, we're just going to clear out $100 there. Yep, perfect. Cleared 100. Yep, we've got 60 and 35. We've got £100. $140 on that sell on US-30, just as I said. Miss the initial one or you get caught. Wait, wick down.
At this stop, we caught word that a man living alone in the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on.
Bang, go. Now let's see if we can get any more.
To find those people that are at the end of these roads that need help.
So if RSI breaks this level, you see, you know you're going up.
I'm asking about why he's alone right here. He said things in life happens.
Got plenty of time, 20 minutes till the oil news where we switch to oil. Let's just see if we can get 2 more trades off. Gold's done, you know, I was happy with that. Gone grey, it's hitting up towards the resistance zone. It shows you how powerful the axe trading system is. You see, look at that, you see, blue zone again. You know you're going to get out the trade because look, you've got a flat part of our baseline and you've got the blue zone. So this is where you should have got out the trade if you were holding about there, look. That's perfect. Consumer confidence nailed.
Do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
Why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism,
US-30 now, let's have a look. Yeah, it's pushing down. I want to get a TP around here now. Let's
to help shape
get back.
Puerto Rico's future.
One.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been.
Remember, this will get affected by the oil news as well. Remember that. Look, pushing down, it's gone grey. This is what I like to see. Come on, get our TP, get in there. See if we can get in there. I was back into the neutral. Gotta hang, no panic. Quick scalp, no messing. So to be 53. Wait for the oil news. Or it was 50. Go in that. Anything yet? No sells, no buys, nothing on that. So waiting for the next one. Pushing up again. We'll see if it breaks that zone on my RSI. Saying on Bloomberg, fairly flat now as you'd expect. So we're just going to focus on the oil. We'll keep an eye on US-30 trading there at the moment. I was hoping there would be. Oil very spiky, but it's loading up for the news. Look. Good results on that, all that news. That's brilliant. 6 trades away. Hit our TP target for the day anyway, so we're playing with lots of house money. I like to see it. RSI now wants to spike up on US-30. Again, we've got this news coming on the oil. Oh, beautiful. Let's see, it's done the M, now it's doing a W. Gold, bang. Retest. You can go back up again. Maybe wants to get back to our breakout zone of 18. Again, just got to wait for the RSI look to break. On green. I mean, aggressive entry here if you went for it. Chance of, yeah, it's only 5 pips. So again, I'd wait. Buy. Nice on this. Wait. Don't rush. Plenty of time. Go back to US-30. Let's have a look. Up. The RSI breaks, as you see, then you know we're going to be taking a buy between this level and this level here. Again to about 35579, 140. Nice scalp. On the up. Why are we looking for a sell? You know, well, I had this set for a sell. We'll wait. Bounced off that, our neutral support, our pivot for the day anyway. So pretty good. Reject. This is nice resistance. It's going to reject off.
When I met him first online, I found him to be really sweet. I think I was the one
Have
who
a
was
look.
talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Brilliant. Done. Yay, you got 21 and 14. So we got another £35, another $50 there, just on that little rejection of that wick on that candle. Again, another 2 trades bagged.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from 2 close villages, but from 2 cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jivansati.com. So it's basically an online portal where we have detailed profile of...
Just before it shot up, I just got the sell. So you have to do in and out. You know it's going to pump up. You want to catch that rejection. And now this level's broke at 65, so it could be going up further. But again, we've got the news coming up.
Websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jivansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
See if we get a dip down. 66 broke. See, this next key level is the 75. Go to this level now. You can see what I mean. You can set up these levels of support and resistance within the RSI and just look for key level breaks. Really nice buy there. I went for the sell because I like taking the rejection of the wick. I like it. On Hakanashi, you can see it wick down before it pushes back up again. So I get in and out of that. $50, perfect. Never change my lot sizes. Everyone knows that. Stick with the same lot sizes. You know, only reduce the lot size if you're trading a smaller account.
The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families.
But you can see that's formed a nice W in the end. Red, second leg. We drew this out earlier on. I took it off. It's perfectly formed it. Based off our heavy support. Had switched back to our neutral pivot, and then we had a retest back bottom, and then the second leg, the break, and then breakout zone. So there you go. Look, that's a perfect.
People don't want to be limited to what is available around them. They want to know
The US-30 was perfect.
before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
No positions up at the moment, we're just waiting for double news. Trade WTR. And it could be a bit slow, as sometimes it can be, but it doesn't matter. I'm just going to up my broken now. Coloring. I'm just going to look for 100 points on this as well. So there we go. I've already decided to can move to the upside. Distance level, as you can see here, look, tap 1, 2, 3. That's why it is. The resistance, it was a fake breakout here on an extension, back down again. So, you know, it's got to break this $72 a barrel, start creeping back up again. Depends on this news, is going to be interesting to see. Size approaching the 75, so the market's reading this as a bullish move, and you can see on here crude oil. Just click on it, and again, I'll tell you. The high expected figure is bad for the dollar but good for gold prices. So let's see. You want to trade US-30, you want to trade USD CAD. This is the one to trade. Canadian dollar, oil, obviously big thing on the Canadian. That's the one you can trade, but you're going to get 5 pips, you know, in a short time frame. But it does move nicely. If not, you stick on the US-30 or you do gold. Gold, remember, you go in the actual gold. You trade the same way as oil. Sorry, get my words out. So if you're taking a buy because the news is good on oil, then you take the buy on gold as well. US-30, it's the opposite. So it's up to you which one you want to trade. Stick with the oil, trade something different. US-30, yeah, it's rejecting off the zone. You could have got more sells in again. You see, when it hits these major and minor resistance zones, I always like to pop little cheeky sells in to get the wick down. We could put some more in on there, but ideally I want it to try and get back down here again, form a bit of an M pattern. It doesn't. Let's see. So we're 7 minutes away from the news. That's the end of the fundamentals day. Tomorrow's news events, and that's it for Christmas. But, big shout out to everybody who's supporting me and keeps this group going, because without the people's support I wouldn't do it. I would just trade alone. Obviously people like what I'm doing and want to learn how I do it, so that's what motivates me do this. So big shout out to all the people in my Mohawk team who've supported me for this last 2 years. We've been doing the team. I've been trading obviously probably 5 years now, all told, but 2 years in this team. So it's really nice to have that support. And like I say, without them guys in there, I wouldn't have the motivation to do this. So thank you, and keep supporting me, because like I say, it keeps us going. I'm looking forward to a good year next year as well, and expanding everything, and we've got more things coming out, more systems, EAs, mentorship. We're keeping it real on tradable time frames that people want to get in and out of the markets on. True scalping.
Has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic
So 6 minutes to go. Let's keep on oil now. Look, finding wants to break this zone. Will it on the news? Will we get a TP?
And made a career out of standing up to big business. While rumors of a 2020 presidency
Could be.
remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat
The
to
news
American
is
values,
good.
and the greatest hope for progressive America.
News is bad on the flip. Then we're going to look at a drop down. About the news, I could have got in on this. We've got a nice continuation RSI just pop on the chart, look. So now you'd be in. You're right on that level, but this is strong enough to get some pips.
She landed a scholarship to George Washington University.
But this is where we'd go for a sell if the news is worse than expected. From here to here, looking for 100, 164 with a spread. Perfect.
Divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers.
So either of these, they are potential TPs.
Influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy.
Sarah is not indicative of where I'm trading. I just put it on the charts already. You know, it could be a buy, it could be a sell. I don't know. Wizard.
Elizabeth Warren
I'd
used
love
to be
to.
a Republican, actually.
That's Stephen Dennis.
5 minutes to go.
Reporter for Bloomberg. Around the time that Elizabeth Warren
Watch this.
she
Settle.
became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. that sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed...
Go, right. Back to the charts. Have a look what we've got. 2 minutes to go. Get ready, everybody. Good luck on the last news of the day. Outside of Omicron, of course.
The forgotten men and women of our country will be forgotten no longer.
30 still pushing on up. Yeah, hitting our breakout zone now. Look, see, time to RSI. See what happens with the oil news, whether that pushes it into our heavy resistance. Here's where we can take some more sales, little rejections. We go with the trend, with 75, so we can enter buys and we can get sales. This is the whole point about scalping, both ways.
Warren actually found herself rebuked by Mitch McConnell for reading a letter.
Okay, 1 minute to go. We've got the countdown starting. 2 minutes to go. Sorry, yeah.
She was given an explanation. Nevertheless, she persisted.
That moment became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the
30, beautiful second leg. Look at that, that's perfect.
Prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Okay. Counting down, 30 seconds. Good luck, everybody. Let's see what we get. Again, don't expect a fast move. This, but again, it's on a resistance level, which is quite good if the news was bad. But we're floating around 50 to 100 points. Broker up. Then make sure we're ready. Yep. Go. Let's see what. Down, look. Good, it's already made its move. That's fine. Worse than expected. Let's look. Better than expected. Yay. Okay. So that was good to buy at the bottom there. Okay. Good that it moves before the move. It touches this right here. To be what we'll look for a 52. So see how it goes. News, I'll just push that into the group. get out these trades whenever you want. You know, I'm not giving financial advice, but just do it. So I didn't quite make the 75 and dipped out because it had that dip down, you see, initial. Quite cool. You can go the reverse on this sometimes as well. See, means you get to buy at a better price at the lower level. I see it. Yeah, because sometimes you can go, oh god, I've missed it, the news is bad, and got in for the sell. Just the market reacting before the news comes out, which is really weird, but that's the manipulation market. And you only see this on the smaller time frames, you know. So if you'd bought here, look, you see, bought here, it'll flash. You know, it's going to reject down, always does, before going in the direction. You just got to hold. It doesn't move fast. Slow, but oh, I might do take some more buy. Checks off KG line. You could want US-30. How that's responsible. Again, that's coming down. You see, again, you can sell US-30 as well. Got in at the higher point. Nice. So we're in. See, buy at the lowest point, down, hit, never going to go. This is where you can expect it to retrace to. So we'll just hold on this. Shows you the manipulation, you know, some people go opposite on there, hold it, and then you just put extra trades in. It was quite a bit better than expected. So they look now in. And see if that. Oh, stick on watching the oil.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, you know, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
Cool, there you go, it's the pushback on oil. We're going to
Only 2 months after Khan entered the
get some buys. Yes, perfect.
London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
Perfect. Oh, what a result. There you go. Got 4 trades away. I got 1 loss because I took a I don't know why I took a sell, but I ended with 375 and then I won 375 on the sell before it reversed back. But there you go, look, see, this is how it perfect. And we managed to win 11, 15, 45 and 33. So another $150 there. Trading the oil news, just had to wait. As I said, that's why if you listen to me, I'll keep you in the trade. I'll tell you when to get in and out.
2015, a decade after the attacks, Khan ran for mayor of London and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The Goldsmith camp has called Khan.
All you gotta do is just wait for that manipulation to end. And I love trading oil. And there we go.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very
Look at that, there you go, there's the spike, look at that, you see. This is what we're talking about.
people knew was a lie.
Go.
This election was not without controversy. And I'm so proud that London and they chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive
So, and that took, what did it take? That took like 6 minutes to hit target.
The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when it went into City Hall.
Like I said, I did lose £3.75, $5. Ooh, sorry. So I've actually got three reds today. Ooh, and so many trades. So yeah, we smashed our daily target. We've done really well today. I'm going to post all this into the group so they can see all my results. And there you go. That has been a really successful scalping session.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan is now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
Great stuff. Well, there you go. And look, beautiful, beautiful bull run on oil, as we said, and to the news. Just had to hold and wait. So just time to enjoy a nice beer or gin and tonic. Now, after a great session, we've been live for like 3 hours plus. I really enjoyed it, showing everybody how you can true scalp even in a supposedly dead market, still earn the money you need to earn, still get those pips, just using price action, PA, and the fundamentals, the whole shooting match. So we had some good results on all these news events today. Hopefully we'll do a bit more tomorrow in the index here. Again, go to www.mohawkforex.com if you want to learn more about what we do and how to join our VIP Discord group. Give us a like, give us a subscribe and share if you haven't already done so you can be notified of when I'm going live next. And we'll leave it on that beautiful. Got an extra trade here, look, on US-30 as well, look, on the second. Post that. But thanks for everyone who's joined me, and we're getting there slowly. We're building this group, we're doing it the right way, and want to show people how to trade scalp the true right way so you guys can get what you need to get out of the market and get out again. So until the next live stream, trade safe, have a good Christmas if I don't go live before Christmas. We'll be back doing a little bit hopefully between Christmas and New Year, and then full on for 2022. But please share and tell everybody about what we do, and trade safe as always, and like I say, have a good Christmas, and I'll see you on the other side. Take care all.